Hey, what's up, everybody? So, today I'm going to be talking about a couple things. We're going to be talking about GameStop and the market as a whole right now, and what has been happening with stuff like AMC and GameStop and Nokia and BlackBerry and Bed Bath and Beyond, and all this crazy ass stuff that you're seeing. Cost is up. Oh my God, cost is up over like a couple thousand% right now, I think. Yeah, I mean, just massive movements from 2.5 all the way to 127. That's insanity. But basically, so everybody's seen GameStop. So if you don't know what happened with GameStop, it's a short squeeze. And so what a short squeeze is when you short a stock, you can borrow shares from your lender, from your broker, and sell them immediately. And this is when you hope that the stock goes down. When you short a stock, you think it's going to go down. So you short the stock, you borrow the shares, you sell them immediately. You hope it goes down. If it goes down, you buy them back at a lower price and pocket the difference, right? So if a stock is trading at 20, you open a short at 20, and let's say it gets down to 5. You already borrowed and sold the shares at 20, gets down to 5, so you pocket the $15 difference, and that's your profit, right? So what happened with well, I should say first that sometimes when a stock is heavily shorted, when a lot of people are shorting it, when a lot of people think it goes down and it goes up, it's called what happens is called a short squeeze, right? So when a stock goes up and somebody's shorting it, they actually have to cover their short, right? They have to buy the shares at a higher price. It's not just you can't just borrow the shares and say whatever. You have to pay them back if it goes up. So what's happening right now is GME is seeing a massive short squeeze, right? Their short interest was 140%. And you might be asking, how can a short interest be over 100%? I'll tell you in a second. So, right, they're squeezing massively, and these big institutions that are buying, they bought at like I don't know, like 5, 10. They have to cover with massive amounts of money, billions of dollars, hundreds of millions of dollars. It's crazy, and this buying obviously makes the price go up by a tenfold. So what's happening right now is that these institutions buy and or these institutions short, and they have to cover, and so that makes the stock price go up, which attracts more shorters, which makes the stock squeeze even more, go up even more, and then those people get caught in the short squeeze, and then these big institutions are trying to short it again, but they're getting caught in their own short squeeze, so it's just making the price go up more, up and up and up. It's going parabolic. It's just going insane, and so what the whole basis of this was, why this is happening, right? Because you can see short squeezes with other stocks. You saw with BlackBerry, they're up like 100% or something. Nothing crazy. I mean, it's a lot, but it's nothing crazy. But with this, with GameStop, the short interest was over 140%, right? So what that means is basically, um, when you're shorting, right, you borrow and sell shares from a broker. But sometimes what institutions can do is they can actually borrow the already borrowed shares that have been sold back, and they can actually use those to short, right? So there can technically be an infinite amount of short interest, right? It can be a 1,000% or short interest, 1,000,000% short interest. But as long as there's like shares to short, you can short it as much as you want. But the problem with that is that when because there's so much, you have to because there's so much when there's a big move, right? There is a big news event. That's what really triggered the short squeeze. Was there was a couple things, right? Back in like December, October, they got a partnership with Microsoft, which was huge, and they also beat earnings by like 300%, right? So it's all very good news. Ryan Cohen joined the board. It's all very big stuff, and this caused this massive short squeeze, right? So you can think of it like, I was talking to my friends about it. You can think of it like in the movies, like when somebody goes to a loan shark to get a loan, right? And they go to one loan shark to get a loan, and they go to another loan shark to get a loan on that loan, right? So what happens to this guy? His legs get broken. Some loan shark comes and breaks his legs with a baseball bat, and that's literally what's happening to Citron and Melvin Capital right now. Is they're getting their legs broken because they've over leveraged. That's the main thing about it. They over leverage their shorts, and they're getting screwed because of it. And what they're trying to do is they're trying to stand up on their broken legs, but the bone shards in their legs are literally cutting their tendons open, and that's them shorting. That's them keeping shorting. So if they were to just stay still and not move and not short, everything would be fine. But they're continuing to move and bleed out, and that's what's going to happen. Is they're going to bleed out and they're going to lose all their money. That's when hedge funds go bankrupt. It's crazy, and this is something you saw in The Big Short as well in 2008. This is what caused the 2008 recession. Is the housing markets were over leveraged, and people realized that nobody was like living in the houses. And Michael Burry, this guy who also called out GameStop at $5 a share, said, "Hey, these mortgage rates are too low. Like it's too high. It's gonna crash. It's gonna implode on itself." And that's exactly what happened. The market imploded on itself, and that's exactly what happened here. Except it exploded. It didn't implode. So that's what happened with GameStop. Um, as for my plan right now, hold it, hold it in. If you can buy it, buy it. I'm not a financial advisor, so I can't tell you um, what to do. But that's what I'm doing. I am holding. I am buying if I can. AMC and GameStop to the moon, $1,000 a share. It's a big risk, but I think it'll pay off. Um, but yeah, that's what's happening with GameStop, and what's also happening. You need to know is that you're seeing a lot of people flock to this stuff. You're seeing like massive news coverage events. You're seeing like people like Ted Cruz and Donald Trump Jr. and Elon Musk talk about this stuff. And what's happening is that these big investors and these people with a lot of money, they're actually taking money out of their 401ks and their Roth IRAs, and they're moving it into these actual like meme stocks like GameStop, AMC, and it's dragging money out of the entire market. You're seeing stuff like Apple, who literally had a blowout earnings report. They were down like 3% today. And that's mainly because of GameStop. GameStop is literally sucking money out of the market, and that's not a great thing. However, it does mean that you can buy most of your swings at a discount, stuff like Clover and CLOV and KMPH and Givo and XSPA and just a ton of other great stocks. You can buy them at a cheap discount. Lots is another one, which is really good. So you can pretty much play this both sides, right? You can play this rise of GameStop and AMC, and then you can buy in at these cheap levels for these other solid stocks. It's really a perfect scenario right now. So that's what's happening with the market. I want to talk about one stock in particular that I like, that I think has enormous potential, and I'm clickbaiting the title right now because I can't pass this opportunity up right now, and I'm trying to tell you guys about it. I'm trying to warn you guys about it because what I think could happen in the next couple weeks could be massive. I'm talking maybe 1,000% return, right? So that stock is SOS Limited. I've talked about this multiple times, but I just want to inform you guys on it. So we can actually look at the technicals, and the technicals look really solid. We've got a massive amount of volume over here. We're trading over this 50-day moving average. We're holding the support level at like 230. It's really, really good. We've got our MACD is moving up. We're not overbought yet. This is on the 4-hour, and on the daily, we got this nice green hammer. We've got this MACD bounce, some volume. It looks really, really solid. Over on the 4-hour, we can see the Bollinger Bands are moving up as well, which I like to see. So yeah, we have a golden cross. It just looks like it just looks so tasty. But it's not just the charts, right? It's not just the charts. Okay, we have to look at not only the fundamentals, but the statistics as well. Okay, so SOS, if you don't know, is a Chinese fintech company, and what they're mainly working on is they work on a couple very disruptive markets right now. They're working on big data processing. They're working on AI stuff, AI cloud management. And they're also working on crypto, and not just crypto mining, but crypto insurance and security. And why this is so important is because Bitcoin and Ethereum and all these crypto plays are not regulated by the SEC. So if somebody were to come and take that money, take that Bitcoin out of your wallet, like you can't do anything about it. So what SOS does is it offers insurance for these plays for Ethereum and for Bitcoin, which is great. SOS could be a big mover just on that alone, but it's not just that. The other thing that I want to talk about is that they are starting to mine crypto, and it's not just Bitcoin; it's also Ethereum. Okay, and so what's happening is they just made an acquisition of some Canadian company. I can pull it up right now. Right, so this is SOS. So you can see, you can scroll down. Um, this is what SOS is. SOS Limited, and there's a couple news things I want to talk about. Right, so we talked about their mining. So they just recently announced an acquisition of this Canadian-based tech provider, and so this is not only good because they're expanding out of China, but they're moving into Canada, but they also have a they also have like they will also already have a footing once they get here. They're already going to have physical space, not only physical space, but they also have this design, construction, operation of cryptocurrency and cloud algorithms, right? So that's massive. An acquisition right now is massive for them. The expansion is just going to be really big. Not only that, but they just bought a bunch of new mining rigs, specifically Ethereum, right? And these will actually um, allow them to make around 200K a day. Mining Bitcoin and Ethereum, which is massive. And you can compare this to something like Mara and Riot. You know, two stocks that we've seen that have ran massively. I can pull up Mara right now, but I mean it's ran all the way from like $2-3 up to $28. You know, and Riot as well. Riot's another big mover. It's ran from $4 all the way up to 30. You know, it's in the same sector. These are blockchain companies. This is what they do. They mine Bitcoin. But the interesting thing to note about SOS is that they actually make money. You can go over to Finviz and look up SOS. And you can see that they already make 250 million out of the 30 million they make in sales, right? So their income is 250 million. They're positive on income. That's really, really good. And it doesn't show it here, but something else I want to talk about is their short flow, right? So like I said previously with GameStop, you're seeing all of these heavily shorted companies, AMC, BlackBerry, they all have short floats of like 40, 50. GameStop's was like 90 at one point, massively shorted. But AMC's, interestingly enough, was around 36, 37%. So it doesn't show it here because they took it down for obvious reasons. But SOS's short float is actually 37. So this has the potential for a massive 400, 500% short squeeze. You know, if it gets over this resistance, it could run massively. And they also have a minuscule float of only half a million. That's really, really small, right? So I think all of this combined, with the news about the crypto being a emerging market and a very hot market right now, especially with the Bitcoin rally that's coming up, that looks like it's going to come up. They also just did an offering, so they can't do an offering for 90 days. That's really the only thing that would be able to drag this price down, right? So if you're gonna get in on a stock right now, you got to look at SOS. You can see other stocks like I called out NCTY on my newsletter, and they were talking about crypto stuff, and they ran from 3 to 27 in a couple days. That was over 600%. BTBT is another one. Ran massively, $5 to 33. FTFT is another one. They ran massively over 2 days, a dollar and a half to 11.20. That is insane. And you can bet your ass I'm buying shares and calls of this rapidly. I do want to add one more thing, and that is the fact that their institutional ownership is very, very low at less than 1%, which is amazing. And their PE ratio is only 1.9, which is really, really good. It's really, really low. It means that they are not that far off from their earnings. Their price is not that far off from their earnings. So you look at something like Riot, and their PE is insane. 100, 100,000, right? So like, it's just like, ugh, I don't know. I don't. I personally think that this is an extremely undervalued play, right? So even looking at Mara, the 16 PE, right? So they're trading at multiples of their earnings. So if SOS even were to trade at 16 PE, that's a massive price increase. And these guys aren't making money either. You look at something like SOS, they're actually making money. These guys aren't making money. It's just facts. You can look at the charts. It's just they're not making money. So if I had one high conviction play right now, it would be SOS. I think I really like it. I have a lot of my portfolio in it right now. If you do want to look at something, I would suggest this one for sure. But yeah, so that's really all I wanted to talk about today. Um, but yeah, I hope you guys enjoyed.